I think what's going to happen, because the bill is $1 trillion, and I know there's a lot of political controversy around tying it to a much broader social bill, but I think the fact is that one way or another, the infrastructure bill as it stands will be passed because it benefits both sides of the aisle in every way. And this kind of infrastructure spending hasn't really happened in the US since the 50s. So besides the obvious repair of bridges and roads, et cetera, as you mentioned, broadband is very important for the new digital economy that's emerged outside of the pandemic. And so I don't see any bad news coming out of that at all. It provides a lot of liquidity for the market. There's lots of companies that will be supplying goods and services towards infrastructure spend. It'll make the airport system, the transportation system, a lot of the logistics better, more efficient, more productive. So it's a win-win for investors. It's a win-win for consumers. It's all good in terms of what it's going to provide. The question, of course, for the market is when do these funds actually get implemented? It's unlikely any of them get put to work this calendar year, but certainly in 2022, 2023, it could be an underpinning to the market. And because it's so broad in terms it touches every sector, the S&P 500, most investors, regardless of what sector you pick, are going to benefit from it. So I don't see any bad news in this bill. And obviously, politics matter, but you got to think on that front as well. Biden's facing some challenges right now in the geopolitical sphere. This probably hurts him a little bit in the midterm, which changes the balance of power a bit. That always happens to an incumbent anyways, but maybe the choppiness of this situation he's dealing with over in Afghanistan probably isn't a positive. So where you end up is a good place after the midterms, which aren't that far away, in total gridlock again, which may sound skeptical when I say it, but is actually very good for investors.
You mentioned one thing people should maybe think about. The money spent looks big, but you're right. I mean, it's not going to hit the market or hit the companies just because the bill passed. Before you spend money on roads, airports, etc., they have to be designed. The work project actually has to go through engineering, permitting, approvals. It's probably a 12 months or even longer process before the money starts to really flow. And stocks might respond early, and then earnings show up with quite a delay. So I hadn't really thought so much about that, but I think it's a very good point that the investment results might be further down the road. And as far as other geopolitical issues, that's obviously been a bit of a mess, has been for 20 years. Hard to know when, how to actually change that plan, but now we're living with the change. The other thing that's interesting is there actually was bipartisan support for this infrastructure bill. And what do you think that indicates we might get out of Washington on any other bills that need bipartisan support?
I think Biden's trying to get things done without reconciliation, and so that to get both sides of the aisles involved. That's certainly been the case on infrastructure, and it shows that Congress can work, both houses can work if we can get the bill passed. He also has to serve the more, let's call it left-wing side of his party that want that $3 trillion of just social spend. That's going to be a much harder challenge. And so if you're sitting in either side, with certainty that there's very few people that don't back the infrastructure deal. And so one way or another, that probably comes to the fore, and it's a win for the president, and that's a good thing. And it would be better if it was a win for him before the midterms to support the challenges he faces there. And so that's just the nature of politics. So I think one way or the other, it's going to happen. And, it's in addition, there's quite a bit of stimulus money still sitting around from the last programs during the height of COVID. So there's a lot of underlying liquidity in the equity markets to look forward to as an investor. And I think we have some volatility here, based around geopolitical events or whatever else, but earnings have been fantastic. I think Q4 will be just as good. And, the Delta, of course, is the wild card. Don't know how that plays out yet, but I think, it sounds like we have a plan with the third booster. So all of it is put into the mix, and people determine their risk. And they're starting to get a little bit of it in the flavor. You can start to see the VIX, which is, something that I watch. It's up about 50% over last week. The VIX is volatility measure, and that's okay. It's just sort of, you can't expect the market to go straight up. There needs to be some corrections, and it's sometimes very healthy.